Over the past decade, one company that has been a quality compounder that I've actually never talked about is going to be ULTA Beauty, stock ticker ULTA, trading at $389.71 per share. Now, this company is actually trading very close to its 52-week low. We can see over the past year, down around 24%, year to date, down over 20%, and in the past month alone, down over 14%. Let's go ahead and jump over to our stock screener, come up here and plug in ULTA and hit enter and start analyzing this. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. And right away, we can see revenue per share, earnings per share, and free cash flow per share have exploded over the past decade, driving a lot of share price growth. And again, keep in mind, over the past 10 years, up around 350% despite being down big over the past year. Now, one of the things you'll notice when we look at the dividend data is this company is not currently paying out a dividend. They have a 0% dividend yield, but the company's ability to pay out growing dividends has increased dramatically since 2013. We can see free cash flow per share at 80 cents there, but 2023 all the way up to $22.76. So it's more than 22x during that time period, which is pretty mind-boggling to think about. Now, we can see during this time period, the company has been buying back shares semi-aggressively, gone from around 63 million down to around 51 million. But here's what's also really impressive about this company. Look at the return on invested capital. In 2023, it came in at 32%, 2022, 29%. 2021 was a bit of a down year, but they have a lot of years where they're seeing return on invested capital of over 20%. So the projects this company is investing in are extremely profitable. If we jump over and look at the profitability and income statement sheet, we can see a lot of growth in the revenue over a 10 and 5-year period. We have 11% and 16.5%. Same is true for net income. 5-year came in at 17.5%, in the 10-year at over 21%, and gross profit ratios have stayed pretty steady and actually even increased in the last couple of years alone. We can see that 10-year average gross profit ratio at around 36%, and in 2023 it was close to 40%. So there's a lot good going on with this company. We can see revenue growing and the cost of revenue staying in a healthy range as well. So what's been going on with this company? Why are they down so much in the past year alone, and year to date almost 20%? Well, there's a couple of different reasons people have started pointing to, and one of them is the company is experiencing intense competition from rivals like Sephora, which is rapidly expanding its physical store presence in the US. And we also have to keep in mind the consumer economy is definitely seeing some elevated pressures, and it's not quite as strong as it was a few years ago. And we can also see ULTA has received downgrades from companies like Barclays. So what is the company doing to make sure they can continue to drive revenue per share, earnings per share, and free cash flow per share growth? Well, one of the things they talked about in their most recent earnings report is they have a planned international expansion into Mexico. And we can see he touched on this. The Mexican beauty market is sizable, growing, and has significant beauty white space. And their research suggests there is a healthy awareness of the ULTA Beauty brand with local beauty enthusiasts, and we'll also see strong engagement in our stores located in geographically adjacent markets. And if we scroll down, one of the things we can see is beauty retail sales are expected to grow 6% a year globally through 2027. And we can see how this is broken out in different areas. And one of the things you'll notice is a good bit of this growth is coming internationally. From a valuation perspective, we can see the starting free cash flow yield for this company is currently sitting at about 5.84%. I think that's a pretty good free cash flow yield for a company that's done as well as ULTA over the past decade. And while dividend payments aren't currently in their capital allocation plan, as we can see, the free cash flow per share has grown so much over the past decade, it's clear if they choose to do so, they could pay a very generous and growing dividend. So ULTA Beauty is definitely an interesting opportunity. I don't have any plans to add it to my portfolio right now, but it is something I'm going to start watching quite a bit closer. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.